Happy Aloha Friday, everyone. Today was more of an eventful day than I actually thought it might be, and that means that things are changing in our model. I'm going to first actually start it out with the Russell 2000, and I want to show you that the most important index to me is the Russell 2000. So with the Russell 2000 hitting a new high, this buy signal is more important to me than the S&P 500. I don't care about my printer. S&P 500, which is more important to me than the S&P 500, the New York Stock Exchange especially, or the Dow Jones Industrial Average, not being at new highs and still being overall stuck between the June lows and the May highs. So that's not as important as watching this index hitting a new high. And what's even more telling is that while everybody was getting extremely bearish and top calling, I was in the same camp. Made sense. Look at the Russell 2000 hitting a new high, but look at the relative strength line lagging. However, right around on 627, so it would have been Thursday, the relative strength line of the Russell 2000 started to dramatically outperform the market. On Friday, the same thing happened. On Monday, it had a very, very, very strong session with the relative strength line blasting out to new highs while prices did not. That was a huge tell, and now here we are with the Russell 2000 hitting new highs. So the Russell 2000 is under a buy signal. The next most important index, the NASDAQ index, as you can see, that downtrend line that I drew connecting the May highs and the June highs to the recent July highs, we are breaking out above that line. That put us officially back into a complete neutral zone, small buy signal. We were already put back into the neutral signal back here. This put us into the buy neutral zone, and as you can see, we're really, really close to being put into a full buy mode. A close above this red and blue top line that you see up here will switch this model for this index into a buy mode. And with two buy modes, that's a pretty strong trend following signal that things should be decent for the bulls. However, look down here in the middle window pane. You will see that volume is average today. And if we look at IWM, TWM, we can see that there's not really volume confirmation on that one. RWM also, you can see not real volume confirmation on those indexes because we can't get the Russell 2000 volume here. We can actually get it on this. So let's go ahead and go here and check out. Let's just do the S&P 600. Let's look at the daily and let's look at the volume. You can see well below average also. So once again, there's not real confirmation on the volume side, but price is all that matters, and this is why marrying the bear side in a QE market is extremely dangerous. Once again, heavy volume selling followed by extremely below average volume rally to new highs. It just doesn't end. This is what a QE market is. It's absolutely insane. It's what it is. That's why I'm currently missing Tesla, and not upset about it, but sad a little bit about it. And SPWR, look at the below average volume move higher. It's above average volume whenever you look at it that way in Tesla on a weekly, but on a daily, no surge on the breakout, so kind of a disappointing move overall. But with our switch back to a buy mode in the Russell 2000, neutral mode in the NASDAQ, to neutral buy mode, and the New York Stock Exchange, Dow Jones Industrial Average, and S&P 500 all falling back into a neutral mode, we are going to go ahead and fully get rid of SQQQ, especially since it's in a buy/neutral mode. We're going to fully get rid of UVXY as it has failed the 50-day moving average and done so on an uptick in volume. So UVXY is gone, and FAZ is gone, because if you look at FAS, it looks pretty good. If you look at JP Morgan, Morgan Stanley, Goldman Sachs, even Bank of America, Wells Fargo Group, and Morgan Stanley, you can see that. And then look at like some of these other asset management firms like Ben Franklin's. You can see that they're trying to like hammer out a low. So FAZ is also going to be a full sell. OSTK is a full sell because it's closing below the 50-day moving average. I know it's basically closing on the 50-day moving average, but it's also closing below the intraday low of 65.75 of the day before, the 75% sell signal. So that's good enough for me to get rid of all of it. If you are still very brave, like I said, you can use the 25.44 area as the final cut loss area. But simply a stock like this shouldn't be acting like this. But I wouldn't be surprised if it pulls a Tesla or SunPower and breaks out to new highs on low volume. FSLR, I assume, also will be the next stock to break out to new highs on low volume. And also, Faro is also a full cover, so that is a complete cover. And that's that on the cover and sell side. Only one new long signal, and it's in a higher quality stock, which is actually the leading stock in its industry group. Decent earnings and sales growth, strong mutual fund ownership growth. The only problem is that the stock averages right around 35,000 shares to 40,000 shares on a daily basis. So it's very, very thin. Because it's so thin, it will not be put in the safe, quote, quote, non-risk account, and 2% of the account capital in the risk account will be placed into RM. RM, once again, is the best stock in its industry group on a relative strength earnings per share basis, multiple pocket pivot point buy signals, and strong volume on the breakouts higher. Hopefully that trend continues, if not the cut loss area. You can go ahead. My first area would more than likely be closed below 34.83 or 24.83, excuse me, 24.91, the 24.97 area, and the final cut loss will be the 24.58 area unless the 50-day moving average gets higher than the low before either one of those lines. The 24.58 or 50-day moving average is broke. If the 50-day moving average rises higher than 24.58, then the 50-day moving average will end up being the final sell area. So that's it. One long, 4 sells, 3 due to the buy switch, 1 full cover, and have a great weekend, everyone.